Good evening, everyone. This is Christian with PerfectStockAlert.com. I try to do a new video on technical analysis every week for our users and our full access members. And on occasion, one of our members will ask a question about something that they want to see a video on. So recently we've been requested to do a video on candlestick combinations and what they might tell the trader or the investor how to trade. So the first one I want to look at is going to be involving 3 candlesticks. This one is to the upside. For some reason my chart's not working there. Alright, so we'll use something else. Well, let me bring up another one. Let's see. Bear with me real quick. See if that works any better. Yeah. These 3 candlesticks right here. Like I said, in this particular case, it's to the upside. You have an up day, followed by a down day, followed by another up day. Had this been a down day, followed by an up day, followed by a down day, it would be to the downside. But this particular one is in favor of bulls, so let's look at it. First we have the up day, and it is supported by substantial volume. The only thing bears control on this entire day, bulls own it. The only thing that section that this candlestick shows bulls have is right here. This wick indicates that there's sell pressure right there. And you'll notice it continued for a couple of days at that level. Bears had it here, here, and then lost it. Now, the up day was dominated by substantial buy volume. That tells us that this is a real move, not a fake move to the upside. That's an important indicator. But we're just looking at these 3 candlesticks, so keep this in the back of your mind. The following day was day traders just taking some profits, really small. And you'll notice that's small based on, again, the volume. The third day, bulls come back in, reclaiming this entire section under 1350. Right here, 1350. Under this line, bulls are dominating. The following day, sells off intraday below that, comes right back up, touches it, bounces back up. Here, intraday, bulls claim the entire day. This continues. How would you trade this? There are several different ways. The one you will see here at PerfectStockAlert.com. On the first day, we draw a line indicating our trigger buy point. This high was 1401, so the trigger buy point would be 1402. This does not trigger until 8 days later, last Friday, when you'd be in and taken higher. This particular candlestick is a continuation candlestick telling you to look for it to go higher, and you will notice buy volume is increasing. 1, 2, 3. Where would you place your stop? At PerfectStockAlert.com, we'd start you out right there. Now there's different ways to do that, and you can advance the stop loss. The one thing you want to be careful you don't do is advance that stop loss limit too fast, or you'll get yourself stopped out. Well, move on up. There you go. If you move it up too fast, too soon, any intraday weakness can trigger that stop, kick you out before the actual move higher. So don't be too aggressive with the stop. Now again, if this had been a move to the downside, let's assume this was a red candlestick all showing sell. This was clear or white showing buy, and this was again showing sell pressure, and volume confirmed that. You would look to short it, as this gap would need to be filled. Gaps get filled. That's just one of those technical tricks that you'll learn over time, but it doesn't have to happen immediately. In this particular case, it did not. You'll notice the play was to the upside, and if you'd watched these 3 candlesticks set up, you would have read that. Another way you'll see people draw it out is like this. A pennant. And they're waiting for it to break above or below the trend line. In this particular case, the following day broke above, closed above that. They would have been buying in here, buying, any weakness, and up she goes. They would have had to stop here or here. At PerfectStockAlert.com, we believe that the pennant's direction can be determined by the candlestick combination. In this particular case, we had 1 up, 1 down, 1 up. That's 2 to the upside, 1 to the downside. I would bet on the upside. There it is. Had this been 1 to the downside, 1 to the upside, and 1 to the downside, you would have had 2 to the down, 1 to the up, you would have bet on the down. Had you bet on the downside, you would have had to place a stop at this point, right here, 1402, and waited for the trigger to the downside to, well, can't pull it up yet. There it is. You would have waited for this to be your trigger. Remember, if it's a selling trend that you're looking for, you invert everything. Your stop loss comes up here, your trigger entry point comes here, but because it's a long, your stop is here, your trigger entry is here. Thank you for your time.